Hello and welcome to this ICAEW webinar, Grow Your Advisory Practice and Win More Valuation Work Using Technology with our partner Valutico. My name is Ros Harrington. I'm a Senior Practice Manager here at the ICAEW, and I'll be facilitating today's session. We very much encourage you to get involved with the webinar today. You can do this by submitting your questions to us using the Q&A button at the bottom of your screen. We have allowed time for questions at the end, so please do keep them coming in. We've also enabled closed captioning for this webinar. You can activate this by clicking the CC icon on your screen. Please note that these are automatically generated and sometimes errors do occur. The webinar is recorded today. You will receive a copy of the recording and the slides that are shared in a follow-up email. You'll also receive some useful resources in the chat during the webinar. Our speakers today from Valutico are Paul Resch, CEO, and Greg Brown, Director and UK and Ireland Country Manager. We'll also be joined by Philip Atkinson, Director for Corporate Finance, and Tyron Reinecker, Associate Director for Corporate Finance from Wilson Partners. But now I'm happy to hand over to Paul Resch. Hi, Paul.
Hi, Ross. Thank you very much for having us. Oh, here we go. We're having the slides. Thank you, Greg. Am I doing the introduction? I'm sorry.
Yes,
sorry for the confusion. Yeah.
Yes, it's okay, Paul.
Okay.
So very warm welcome to everybody. Really looking forward to presenting some ideas on how we can obviously grow your advisory offering and win more valuation work. So some of the topics we're obviously going to be looking into today, we'll do a very brief round of introductions. Then we will explore why the demand for valuation services is obviously growing, common challenges you may face. And obviously a big play is how AI and technology increasingly helping obviously accountants unlock new opportunities. Then we'll have a practical session and we will finish off with a Q&A session. But before we do that, we have a first poll question. So Ros, I'll leave you to set the poll.
Perfect, thank you. That should pop up on your screen now. We're asking, what were your motivations for joining today's webinar? To learn how to monetize valuation work, to grow the advisory side of your firm, to explore ways to deliver valuation or advisory work more efficiently, or general curiosity about industry trends and tools? If you take a second to fill that out, and then we'll let you know what the answers are. Brilliant. So quite a spread there. Most people, 43% saying to explore new ways to deliver valuation or advisory work more efficiently, closely followed by to grow the advisory side of the firm, then general curiosity about the trends, and then monetizing valuation work. Do you find that interesting, Paul, Greg, surprising?
Great. I think everyone's in the right webinar. Excellent. Great. I think we've already done the introduction. Next slide. With a little intro from Wilson Partners.
Thanks, Paul. Good afternoon, everybody. So Wilson Partners is a full-service firm of chartered accountants and business advisors. We have offices in the southeast, the southwest, East Anglia, and the East Midlands. We have about 4,000 clients across those offices and about 360 employees.
Great to have you with us today. Thank you for joining. Tyron, thank you also for being with us today. Maybe a few words about Valutico. We've been around for a couple of years. We are a global provider of valuation technology. Well, by now we actually do quite a bit more than just valuation technology. We also have due diligence solutions, for example, cash flow forecasting, ESG assessments. But valuations is really where we're coming from and our background. Valutico itself, the platform is as we call it, a one-stop shop for all your needs. So basically, we give you access to financial data, which is obviously always critical when you do valuations. We automate a lot of the processes in valuations and make you a lot more efficient in doing so. Increasingly also with artificial intelligence, and we provide you support from specialists, and that's something our clients always point out, right? When you talk to Valutico, you don't talk to an AI solution or a call center. You talk to specialists, and we can help you with valuation projects. I said we're a relatively global company. We have around 800 clients in 90 countries currently. and currently 80 team members, also globally distributed. So we really believe in boots on the ground. We are where you are. Very proud to say the UK is our single biggest market, has been for a long time. Yeah, I think that's also reflected in who we work with in the UK, and our long-standing partnership also with ICAEW.
Time for another poll question.
Perfect. So what types of valuation requests are you as practitioners most frequently receiving? Is it around company sales, tax valuations, probate, share valuations, or dispute or contentious, for example, matrimonial? So about 37% saying company sale, followed by tax valuations, lots of share valuations happening, followed by dispute and contentious, and then only 3% asking about probate.
Very similar, by the way, to what we see on the Valutico platform itself when we ask clients what they usually do with the tools. Great. Well, that brings us, I think, to our first fireside chat. Philip, again, great to have you with us. A few questions maybe from us to you. I mean, first of all, what's going on in the Wilson Partners world? Have you seen any increased demand for advisory services recently?
Yes, thanks, Paul. Yeah, some of the growth in demand has been due to our own acquisitive growth. Wilson Partners took investment in 2021, and since then we've completed 9 acquisitions. So consequently, the firm's client base has grown to about 4,000 clients now. Firms that have been acquired were largely compliance focused and had no corporate finance arm and often no other specialist advisory services either. Usually they referred that type of work out to other trusted advisors. So as a result, we've seen a notable uptick in demand for advisory services from out of our enlarged client base. There's also been a number of macro factors have had an impact. Obviously, we're living through fairly unprecedented times, the pandemic, Brexit, the Ukraine war, a change of government, cost of living crisis, Trump's tariffs, etc. This level of sort of economic uncertainty, regulatory changes, and a growing appetite really amongst SMEs to navigate these changes and challenges has led to an increase in demand for advisory services.
And what do you say? Would you say it's fair to say that SMEs are also facing more complex decisions, and need better support from their accountants?
Yes, absolutely. SMEs are navigating this more complexity than ever. It's not just those macro challenges I mentioned, but also funding challenges and digital transformation, etc. as well. And they're increasingly looking to their accountants for strategic insight and not just compliance. Accountants tend to have deep relationships, often established over many years, and therefore clients are increasingly looking to them, their trusted advisor, for a one-stop shop to their financial needs. And really that's what we aim to bring at Wilson Partners.
And by the way, I mean, I think that's also something we're seeing, right? That the role is just changing, right? From, as I call it, a data processor, right? Especially in valuations, to a trusted advisor, right? A strategic partner.
Yeah, it's very much the ICAEW have carried out a number of surveys over the years, both with member firms, but also with purchases of professional services. And that has very much been a focus on they are looking for that sort of one-stop shop type approach.
And when your clients come to you, I mean, what type of mandates do you typically undertake? I mean, not just in corporate finance, but across the whole firm?
Yeah, we've seen quite a wide range of advisory mandates, particularly around sort of strategic and exit planning, tax, EMI schemes, and also increasingly, because of the changes in the last budget around IHT planning. We mentioned that sort of matrimonial, probate, shareholder disputes, so contentious valuations. We've seen portfolio company valuations coming through as well from private equity firms, as well as doing valuations for financial reporting purposes, so purchase price allocation under IFRS 3 and FRS 102, and post-transaction impairment reviews. Beyond that, we're doing the usual buy-side and sell-side M&A valuation work. A fairly broad mix across the firm.
A one-stop shop, like you said, yeah. So a wide range of typical projects. Yeah.
Indeed, absolutely.
And I also wanted to ask you about the increased regulatory and reporting pressures. Is that something where clients have increased expectations?
Yeah, definitely. Clients expect more clarity, more insight, and faster turnaround of reports. Reports now need to be not only technically sound, but also easily digestible and decision ready, especially for boards and investors, very busy people. Increasingly, there's an expectation that valuations will be prepared by an independent third party rather than internally by the company itself. And reports nowadays are more heavily scrutinized by investors, by lenders and other stakeholders.
Okay, yeah. And I'm sure some of your competitors are listening now, but what advice would you give a firm that is considering expanding its range of advisory services?
Obviously,
what can you share?
Yeah, refer them to Wilson Partners, but no, seriously. So expertise is key to ensure that you're compliant with relevant standards and professional ethics. So that's very much the model we have followed here at Wilson Partners. We've recruited experienced staff. We've invested in appropriate external and internal training to maintain skills and upskill existing staff, and make sure that they have access to the appropriate knowledge banks and tools to provide those advisory work. I think it's important for people who are listening in to understand what their clients' pain points are and build around that. So invest in specialist talent, develop repeatable processes, and make sure your advisory offering complements and doesn't compete with your core services.
Well, on the subject of tools and repeatable process, I think I have some ideas myself. Maybe I can share them later. I know a company.
Great stuff. Just a quick summary, obviously, for the purpose of obviously doing valuation. So annual reviews for clients, valuations for tax and probate purposes, succession planning, capital financing. We've already touched on shareholder disputes and matrimonial cases, and of course, company sales and M&A mandates. Time for another poll.
What is currently holding you back from doing more valuation work or advisory work? Is it that you feel you have limited time? You have limited expertise in valuation, in your opinion, a lack of tools or resources, not enough staff or dedicated team members, or is there another reason holding you back from expanding the service line? So 42% feeling that they have limited expertise in valuation, wanting to expand on that. Equal number having limited time or lack of tools or resources, and then just a few feeling they don't have enough dedicated team members or another reason holding them back. Perfect. Paul, I wonder if I could scratch in your expertise for a little bit. When you have firms coming up to you at events, I know you're very well connected in the field. What are they saying some of those struggles and challenges are that they're facing when it comes to valuations at the moment?
Yeah, I think that strongly echoes what we just saw here in the poll. The lack of expertise, right, and especially the perceived complexity, right? Valuation is a complex field, right? You need to be highly trained to do that. So that's something that's definitely a bit of a barrier to entry, right, in that field. I would add another point that we didn't hear from the audience, and that's lack of market data. Right, that's something that historically was, extremely expensive. You needed to subscribe to, different databases in order to get high quality data. But that's exactly why we're here. Right, Valutico is that one-stop shop for all your market data needs.
Perfect. And those who are already in the field and are just holding back from expanding right now, what do you think those key stoppers are from stopping them doing more valuation work?
Yeah, I mean, again, similar to what we saw, I think time and resource constraints, right? They're labor intensive, they're time consuming and expensive. As I said, that's something we can help with. Connected to that, the human capital and skill gaps, right? It's harder and harder to find the right people who can do this sort of work. And we can help there too with training. We typically help our clients also build up the know-how. There might be an initial lack of client projects, right? So once you decide to do that kind of work, you need to build a pipeline. I mean, the good thing is valuation work is relatively stable, right? Whether we're in a good or a bad economy, people always need valuations for all the various reasons we already heard. But in the beginning, it can be hard to build that pipeline, and that's also something where where we can help. And then what Philip already mentioned, right? Repeatable processes, that's something really, really important. We sometimes see a bit of a resistance to change, right? People use their existing spreadsheet solutions and it sort of works, right? They know their models, they've worked with them forever. But that can be a bit of a blocker to scaling, right? And to doing more work, right? So you need to, build standardized processes also in order to guarantee a certain level of quality. And a tool like Valutico can certainly help. And maybe to add one more thing, hasn't come up yet, but the topic of AI, right? Pressure to adopt AI. That's a new topic that comes up a lot now across all levels of seniority, by the way, right? That there's, everybody is facing pressure from somebody to do something about AI, right? But I think we'll have a bit more time later to talk about the AI topic.
Fantastic. I assume for firms like Wilson Partners, where you have international offices, where you have people working over standardized processes, procedures, it's going to become more and more important. We have, in terms of Valutico itself, and being a bit concerned about technology and maybe hesitant to dive in, do you have to be a tech guru, do you think, to be able to use these tools, to be able to use AI alongside what we have going?
Well, if you use tools like ours, no, right? Because good AI solutions are, built into products to, work around your workflow and not the other way around, right? You don't need to be a coder. You don't need to be a tech wizard or a guru. So yeah, and I would also strongly, encourage everyone to look for solutions like that, right? Not all solutions are, easy to use and have good user experience, but I think that will be really key. And maybe to address one concern, and I'm sure you've heard the saying, AI is not here to replace you, but somebody using AI will likely replace you, right? And I think that's very true, right? So my advice would always be, be curious. Don't be scared about AI, right? It's only here to help. And valuations is a field that lends itself to, being supported by AI, right? Just by the very nature of how valuations work. We recently launched EVA AI, as in evaluation AI, and that's a tool that's built into our entire product ecosystem. It can help you build peer groups. It can help you find the right transactions. It can help you do cash flow forecasting, import financial data from PDFs and Excels into Valutico. So really, at every step of the Valutico process, there is EVA AI, like a little helper to, make your life easier.
That's certainly how I'm using AI. Brilliant. I think if we go back to talking to Wilson Partners a bit more about how they are working with you. Oh, first a poll question, apologies. How do you feel about incorporating AI into your valuation advisory workflow, our listeners today? Is it a positive step you're looking forward to fully embracing? Do you like it as a concept, but you'll adopt it selectively? You're a bit unsure and need a bit more time to let it prove itself, or you're really skeptical and plan to avoid it for now? Brilliant. Liking the concept, but adopting it selectively, the vast majority of you, and 37% of you seeing it as something positive, 5% unsure, and 11% skeptical and avoiding it for now. Greg, if we want to go over to the next. Perfect. So I will reach back out to you, Tyron from Wilson Partners, joining us today from Cape Town. How long have you been working with Valutico, and what was the background to you starting to work with them?
Hi Ross, hi everybody. Yeah, I think we've been using Valutico for just over 2 years, started in July 2023. But we've been aware of the platform for a longer period. The main driver for us was to streamline the valuation process, improve the consistency across the various mandates. But it was also critical for us to just wait for the volumes in valuation work to increase, sort of to do that cost benefit analysis for the wider business.
And did you know that tech was going to be core to that strategy?
Well, yes, yeah. I think for us, the main one there was, like I said, we knew about the platform, but efficiency and scalability eventually was the main focus for us. We want a solution that allows us to deliver a faster, output, especially for as demand for our valuation services grew. A secondary benefit for us was making pitches for various M&A mandates more efficient, where we can provide an indicative valuation to a client, say, look, based on sort of the sector you're in, this is sort of the value, the multiples we're seeing, and that has definitely helped us streamline another facet of the business.
How difficult did you find it to implement the new tech into the culture and the firm as a whole?
Um, I think it was very, very, very easy. It was, I think, the typical old-fashioned way was, like Paul said, the spreadsheets, and you've got your model, and you change one number, and everything changes, which is great. But when you come to, and especially with valuation, they can become so complex and nuanced that it's important to have a standard process in place. I think Philip and Paul said that. But yeah, it's been great for us. But just time consuming previously, I guess.
I think a lot of our members, their hesitance around new tech is that onboarding piece, the training piece, getting everybody au fait with using it from the top down. How have you found the onboarding and the training element?
Been fairly easy. I think we've both Philip and myself that look after the valuation in the business. Philip more than myself have a wide range of expertise in the field. So I think with sort of the current, as Philip said, getting the right staff through the door helps. But there's always a question, and I think our relationship manager, there's multiple questions we've asked him over the last 2 years, and he's every step of the way. If he doesn't know, he'll quickly say he doesn't know, but find out for us, and then we'll, as Paul also said, there's always somebody willing to help and listen and ask and go the extra step for us.
So you have a named person that you work with that you reach out to at Valutico who helps you with all of that.
Yes, yeah, we've got there's for the last 2 years we've had the same person, so that helped a lot.
Oh, brilliant. So it's not just once in, that's it, the relationship's over. You build a relationship over time with them.
Yes, absolutely.
Fantastic. So what would you say has been the biggest benefit for you of having the platform in your firm?
Um, like I said, I think it's just streamlining the process, getting a sort of exposure to at least we understand sort of the output and the process, and it's going to be standardized, and we can add those pieces of work to analysts, and we know sort of what they're going to give us back. We can take it from there, and also give the more people in the team more exposure to other elements within corporate finance, just not sitting there and doing the same thing all the time. So I think everybody wants to do valuations, it seems, at least in our team. So it's nice to, I think majority of our corporate finance team actually understand how Valutico works. Every person has done some sort of something on Valutico, even if, like Paul said, the database is quite nice. And on the AI point, is the typical thing: garbage in, garbage out. So if you get all the inputs and you ask all the right questions from the onset, the peer selection and comparable transaction output that the AI integration in Valutico gives you is quite nice. And then just that's a good starting point. So we understand the analysts are starting from the most recent data set. And then, so we know that basic level is definitely covered.
Perfect. I assume that you wouldn't have agreed to come here and talk with Valutico on behalf of Valutico today if there hadn't been a return on investment, if you haven't found it a profitable decision to make for your firm.
Yes, I think absolutely. I think for us, it's just I think the valuation service is on a different on a level that we are quite happy with. Valutico, it's a part of our valuation service and process in the background. So I would say definitely happy with the return on investment for us.
Fantastic. Thank you. I'll hand back to you, Greg.
Thank you very much. So just a quick kind of recap, AI and technology recap. So some of the kind of the merits and benefits, very streamline things. Obviously, we also provide semi-automated peer selection, AI-driven forecasts, smarter transaction screening, and obviously tech-guided methodology selection and automated reporting. So I will switch now and I'll show you the platform and I'll show everybody how it all works. So I've taken the liberty of logging onto the system to get the session off to a good start. I think as Tyrone has mentioned, this is a powerful piece of kit, but it's actually incredibly easy to use. Okay, so we support you every step of the way. As far as the onboarding is concerned, we find out what you're looking to get from the product, how sophisticated you already are, what your clients like, you know, the degree of sophistication, and we will even help you with your first few valuations. So yeah, it's definitely a software plus a service support relationship. So when you log on, you will have access to these 3 modules. This is the module clearly you're going to be spending the most amount of your time in for the valuation of private companies, but also as part of service, we've got lots of useful resources centers. So the first one here is we've built out a very expansive list of peers, quite broad by definition, but most types of entity you'll be valuing would fall in one of these category titles. This number denotes the number of peers we have in the system, and across the top, you have some key multiples. So this is your classic Friday afternoon situation. You're trying to clear your desk for the weekend. The client calls in asking for a multiple. This would be a good starting point. Hand in hand with that, we've got transactions tab. So similar levels of engagement, really all of these industry sectors, but this time the number of deals we have. Naturally, once we go into the main platform, we'll be able to take a much more granular, closer inspection of both the peers and transactions for a lot more detail. So let us begin. So as what has been alluded to, a good starting point for us really, if you have a company presentation pitch deck on the company you're looking to value, we'd strongly encourage you to upload it to the system, and the system will start working and extracting the core components of that document. So this may be a company in Kent, it's involved in the food industry, these are the products, these are the turnovers. So this is where the AI journey begins. So I highly recommend it, and you'll see the merits of this very shortly. Please note the word optional, you don't have to do that, but again, you'll see how this will save you time. Next up, we give it a name. So just in this instance, I'm just going to call this one Test Company SME. If you're doing a real company name, that will obviously pop up here as well. We always leave it on the table that not all of our clients, again, as per the survey, completely comfortable with using AI perhaps. So you have an opportunity to manually upload a company description, some keywords should you wish. Then we move on to the fundamental section. So here, very straightforward stuff really. So first and foremost, we're obviously going to value a company in our home market, the UK. Industry sector, going to be quite traditional, quite classic. I'm going to value an SME in the trading and distribution space. After that, you need to pop in a last reported annual revenue figure. So again, I'm going to go for a quite modest 3 million there. Then we have the maturity of the business. As most of you will know, you're probably tackling a startup valuation completely differently than a more established private company. So depending on which one you select here, the platform at the very end will recommend the most appropriate valuation methodologies to use, just in case you're wondering. But for this instance, I'm just going to keep it quite simple, normal private company. Next up, if you can think of a similar peer which closely resembles the product service lineup, the operating model, you'd enter it here. And the big benefit there is this will really help the platform work out the associated peer group. But again, most of the time you will be able to think of somebody, but if you can't, then perfectly fine to leave it blank. 2 more boxes to complete. Valuation date, today's date is the default. However, many of you, I'm sure, are doing tax valuations, valuations for probate, maybe the odd dispute or contentious valuations. So you can go back in time and do a backdated one. Keep updated, fairly common sense. If you happen to start a valuation, you don't manage to finish it, and then you get pulled on another project and you kind of return several days later or a few weeks later, you log on, the platform will sync and recognize that and update all of the data. Last but not least, you need to pop in the last actual year end for the firms. I'm going to go for DEC 2024. Then finally, I just want to cover the full range of different types of valuation mandates you can perform on the platform. So no surprises really. We start with the classic buy side, sell side mandates. I'm not going to call all of these out, but the ones probably relevant for the audience would be ones for strategic planning. So that's obviously annual reviews, tax purposes, succession planning, divorce, shareholder dispute, EMI. But again, I'm just going to go for normal sell side mandate. So that's pretty much it. It's as simple as that. That generally speaking takes a couple of moments to do. And then we're going to be moving on to our next section, which is called our qualitative assessment. So I'm sure many of you, before you jump into the hard numbers, the financials, you're probably having a tea, coffee with the business owner, existing owner, maybe new client, and you're really scoping out what they're looking to kind of achieve. Okay, so the whole idea behind the qualitative assessment, what we're really doing, we're priming the platform that we're looking at private company valuation and SME valuation. And all you're really looking to do is to uncover some soft facts so you can work out your cost of equity premium and your discount for your trading multiple. So things you'll be grading and assessing will be company size, positioning, market share, competition, management quality. Now, when this screen loads, it's purposely set average across the board. And the whole idea is you're using your professional judgment here. So a good example would be, let's say there's a senior leadership team at the helm there, very strong. I'm going to move this accordingly. And if you notice at the bottom, the risk, the premium, the discount, they all change as a result. So yeah, this is like a mini due diligence, bit of a SWOT analysis. You're drilling into the micro and macro components of the business. Pretty easy. The number one overarching question that always arises when I do my demos from the client, we get it, but help us out. What's big, what's small? Kind of subjective, relative. So how do we go about establishing that? So small, I definitely view as your classic SME. That's going to be a business probably below 15 million, startup, young growth kind of firm. Big clearly is going to be the polar opposite. It's going to be a company probably trading in the hundreds of millions. But bear in mind, it's a qualitative assessment. Shouldn't really be talking about numbers. Better approach probably is the company you're looking at to value. How does it sit within this respective industry? Is it larger or smaller than the average player? Still unsure. We just leave in the middle. On the right-hand side, you probably spotted already, we have a weighting system. So this is the order of magnitude importance. And yes, you can change these. So a good example, if you're doing a valuation which is more tech-centric, you might be inclined to increase the product quality, the innovation. If you're doing something more traditional where there's FX risk involved, you might up the currency risk there. I'm going to give you lots of top tips and takeaways how to get the best out of the platform this afternoon. A few things. Firstly, you can always have the capacity to override the premium discount. We appreciate that practitioners have strong feelings, sentiments about those. So again, help yourself, and you can obviously do a manual adjustment. And also, why not consider actually doing this with a business owner? A lot of our clients, the feedback that they give us, this is a good engagement exercise. You sit down, you do it together. The client kind of agrees or maybe disagrees, and this will come out in a wash. So if you have a question on your premium discount, you've got a bit of a backup here. Final point, these are our house questions or our house templates. You can, of course, you probably already have your own kind of questions. So there's a possibility there to incorporate them. Just finally, final comment really on this section. This I'd already reserve for more of a formal valuation mandate. If you're doing a light touch indicative valuation, you can actually skip this entire section. Okay, so please don't think you're compelled to complete this. It's not for everybody. You can skip it, and then you can manually come up with your premium discount a little bit later on. Next up for us is the peer selection. So again, I think most people's kind of key challenge is not only to work out who's who from a peer perspective, but also to find the relevant multiples. So we give you about a dozen or so peers to start off with, but the expectation will be to vet the peers, ensure you're happy, comfortable. Any peers you don't like from the list, you can remove. So you're never going to be left with original dozen or so by the time you do the kind of the sifting process, and then you'll probably be left with 5 or 6 what I call good peers for the valuation. Just as you can remove a peer, no real surprises. Lots of nice user-friendly filters, so you can search by industry. Again, a comment we received back in the day, industries are great, but a lot of people find them to be quite broad. So you've got things such as food, manufacturing, software. Lots of companies obviously come under that banner. So what we've added here, which is quite handy, is a full text search. I think everybody knows how that works. So just dive straight in, enter a product or service, and that'll be a much quicker way to find the relevant peers. Of course, we will always exhaust the UK for options, but failing that, you may on occasion have to borrow some peers maybe from Europe. If you're doing something techie, be highly unusual if you then use a few peers from North America and so forth. Go back to the main section across the top. Already you've got all the standard staples here. You've got multiples for EV sales, EBITDA, EBIT, price earnings, and so forth. I'm going a whole hog today. I'm literally showcasing the entire platform, but please do take into account every single stage of the platform you can customize. So if some of these you don't typically use, you can obviously unclick these and they will be kind of removed from the equation. At the bottom, you've got the median of the values above here. Here's the discount. If you recall, in the previous section, I adjusted the management quality. I'm actually now going to do a full manual override and change that to minus 20%. Last but not least, you can hover over some of these peers and then you can get much detailed perspective. In case you're wondering, we've got 53,000 peers in the system. All of them have a write-up, the fundamentals, a website you can click through to. So straight away, you'll get a feel whether this will be a suitable peer. And probably most importantly, we've got product service lined up here. So for instance, if you're doing something niche, if you're valuing a firm that distributes cladding products, you can obviously copy and paste this expression or this term into the full text search to see whatever peers you can find. Next up, we've got the financials. At this stage, many of you will be wondering, where do we get our data from? Obviously, it has to come from somewhere. So pretty much from day one, we built up a very solid partnership with a company you may already be familiar with, a company called S&P Capital IQ. In the UK market, they're kind of number one for their data metrics. So we're very proud and pleased to say that we've integrated CapIQ into our system. And this is obviously updated on a continuous basis. Next up, you've got similar peers. So if you go to similar peers, you can look at similar peers based on company descriptions, what AI is suggesting as peers, what other users are selected as well. So that's basically the peer section. Next up for us, it's all about the numbers. Before I introduce you to this section, I like to take a step back. One of the things we pride ourselves as far as the functionality of the platform is concerned is people are different in terms of how deep they wish to go with the numbers. So we actually often 5 degrees of sophistication. So the starting point for a template would be our income statement. So this would be for a classic small company, maybe a micro SME business, or if you're doing a light touch indicative valuation. So I'll leave that on the screen for a few seconds. Next up would be the basic plan. And the basic plan mirrors the entry level statement, but now we've got a few line items of the cash flow statement and the balance sheet. And this middle one is probably the deepest you'll probably want to go. This is our integrated 3-statement model. So basically you've got the income statement again, lots more line items of the cash flow statement and the balance sheet, and we've got the tax schedule. Obviously, you don't need data points for every single point, but the more obviously the merrier. The next obvious question is, how would you get your data into the platform? The simple answer is Excel. So what you would do is you download a template like this, you'd populate the template, you'd send it onto the client to populate, nice and easy. Then you would return back, and then here you would upload your template, and then your numbers will populate the numbers in the background. Many of you have probably observed when we reached this section, there were already some numbers here. So you might be asking yourself, where did these numbers come from? So probably when you're working with your clients, you've got some good clients you're working with, they're particularly special, apt at what they do, but they're not necessarily fantastic with their own projections. So what we offer as a starting point every time you start a valuation is what's known as consensus industry estimates. Okay, and where do these estimates come from? They actually derive from the previous peer section. So all of those peers are continually scrutinized, monitored, tracked for their growth expectations. So do a good job in the peer section, and the payback will be here in the estimates. Once obviously your numbers have been uploaded, you can obviously manipulate the data, override the data. This is a live working document. You can change the time frames. You can do a 3-year forecast. Most of my clients do a 3-year forecast. Occasionally go out 5 years plus. Historically, again, you can upload 3 to 5 years worth of numbers. Lots of opportunity to do scenarios as well. Some of you may never present just the one end permutation. You may present base case, top case, worst case, depending on whether a client reaches its KPIs or not. And then across the top here, just some more tabs to show you. We've got the net debt bridge. So here you're popping debt, pensions, cash, non-controlling interests, and you can also add your own custom net debt line item. So give it a name, give it a number. A few more to show you. You've got a valuation relevant cash flow tab here. I won't attempt to call all of these out, but I'll scroll very slowly just to give you a feel perspective for what's on offer here. Then we've got an adjustments tab. Quite difficult to do a valuation without making some form of adjustment. So a classic example would be director salaries. So here you would add the name of the adjustment, the figure, the amount, and obviously we also include the rationale. Obviously, if you make an adjustment, you probably want to put that down in reporting purposes as well. Last but not least, we've got a validation tab. The best way to describe this is like a plausibility check of the business plan to make sure it's internally consistent. So here we see the growth rates for the firm, its margins, its investments, and reinvestment rates. We've got a value drive analysis, which focuses on assets and return on cap employed. You've probably noticed there's some red here. So you'll be pleased to know the platform's got an inbuilt quality control system. Mistakes do happen in Excel. So someone could have made a mistake. There's an anomaly there. So if you upload something and it's out of kilter, the platform will spot that and highlight that and say, hey, are you sure about this? Do you wish to continue? So that's the forecast section. Next up, we've got the transaction section, getting towards the business end of play here. So this is where we house all of our private company data. You will see a list of deals by date, acquirer, targeted business, all the standard stuff we already know about, stake acquired deal value, and the multiples if they exist. Obviously, we're not claiming to be an oracle here, but there'll be enough data for most types of valuations that you undertake. Again, the expectation would be just to kind of vet these. Any deals that you don't like, you'd remove from the equation, just like you would in the peer section, and then they would obviously disappear. You also have an opportunity to upload your own transactions. Some of you may already have your own database that you're relatively happy with. So you can use your own transactions, use transactions from your own databases. And then you've got a very nice filter. Again, this will help you really drill down and find exactly what you're looking for by keyword, again, industry, by bidding company, target company, by date. You can even do a search by deal value as well, if you wanted to. Just a heads up, we've got one of our database which will be relevant. That's a company called Bowhurst. So over the last few years, I've continually quizzed my clients, who's good for private company data, who would you recommend? If you haven't heard of Bowhurst, they're a UK outfit, and they're particularly strong when it comes to SME, smaller type of transactions, early stage deals. So collectively, you have access to 1.3 million deals on our platform. Again, just to finish off, you can read up on the transaction details of each deal, quick summary, who's who, what went on. You can do a search by show similar transactions, and you can also do a search by same buyer as well. So these guys, looks like they've been on a bit of an acquisition spree. You can see who else they've acquired. All of our private companies have write-ups as well. So it's not just our listed companies, so you can get a bit of a further appreciation for what these guys do. That's pretty much it. So far we've only collected inputs. This is the stage that it all comes together. We will present our results in a football pitch style presentation. Just a heads up, I'm going to be showing you multiple valuation methods. I'm going to be showboating. Clearly, you're not going to be using all of these. What our clients like to see is lots of options, lots of choice, and they will then make a decision as to what the most appropriate methodology would be for that given situation. So just to cover what we're seeing here, we originally called it test company SME. Here you can switch between equity value, enterprise value. If you're doing an EMI growth share valuation, you would go to equity value per share. And this is really straightforward. The orange dot here in the middle represents the value of the business we've just been looking at based on this methodology. The darker blue range is the peer group. The most important range arguably here is this gray range in the middle. This is the average of all of these methodologies. So we're currently valuing this business between 2.5 and 3.5 million. Now, two things in my defense. Obviously, I've done this super quick this afternoon. I've spent zero time, energy, effort in any of these sections. Of course, you've got to spend a bit more time refining that, getting comfortable and happy with it. Secondly, nobody would use all of these in tandem. So top right, you've got the valuation methods, and you'll be pleased to know we support all of the mainstream valuation methodologies. So we've got discounted cash flow WACC, simplified version, adjusted present value. And what you would typically do, you'd start hiding or closing the ones that didn't interest you. So again, in this example, for now, I'm going to say I'm not interested in peer multiple approaches. I'm not interested in a transaction multiple approach. I'm going to turn off the LBO. Don't forget to save the changes. And then, as you can see, the valuation will get updated. So every time you're on the end game valuation summary, every time you make a change, the valuation will be recalculated. Just waiting for that to load up. What I think you'll find, that valuation range, yep, it's kind of narrowed considerably. I think when we loaded this up, there was a million difference, and now it's much more of a realistic client-ready range. Next up here, we've got the net debt bridge. We've got levels of value. As you all know, you tackle a 20% stake valuation differently than you would value a company as a whole. So this talks about minority value. Then we've got a cost of capital page. This is really more for you rather than the client. And in essence, this is a flow chart showing you how your WACC's been calculated. So blue is showing you cost of equity, light blue cost of debt. Here in the middle, we've got the cost of equity premium. And if you recall, in the qualitative assessment, originally we started off with a 5%. Now we reduced that to 4.75. What you also be pleased to know, you have complete control over the valuation. So you can personally manually override the valuation range. You can interchange between the different scenarios, and then anything on the right-hand side, you can obviously adjust. And this is not a black box. Everything comes with a source reference point. So you'll be very pleased to know you can look under the hood, under the bonnet, and you can see all the background calculations. Just to finish off, then we've got each valuation method in a lot more granular detail. Also includes sensitivities, WACC, perpetual growth rate. But again, I've done this relatively quickly today, but we've already got professional grade presentation has been produced in a fraction of the time. I will open up some of these that I previously hid, so you can get a feel perspective for how these look. And also, whilst we wait for that to load, you can share the valuation if you wanted to. A hyperlink is generated. So if you're working part of a team, you can share the link, providing your colleagues got a license. They can obviously open up the valuation. You can make notes on each valuation, any assumptions. Again, for colleagues, you might be off on a holiday, you might be passing over a piece of work. Quite handy to give your perspective, your thinking, and so forth. Once you're done, you will then move to the export section. The good news is we can export in both Word and PowerPoint. I know a lot of you prefer PowerPoint. Some of you stick to Word. I'll show you both versions. So this is a standard PowerPoint that would be downloaded. But the added bonus really is you can actually upload your logo to the system, and you can even go as far as choosing your own corporate colors. So you really get that full customized experience. Very slick deck is produced, and not only do we produce the material that you requested, we include an explanation here on the right hand side, but again you can edit this and add your own narrative. At the bottom, again, I think I highlighted, we've got the source reference points, we've got various appendices which talk about the valuation methods you've opted for, key characteristics, use cases, and obviously advantages, disadvantages. So that's the PPT. In terms of the Word deck, this would look like this. This is just a sample EMI share valuation. The yellow color just indicates information that we wouldn't have, the platform wouldn't have. Obviously, we wouldn't know the reg number or the incorporation date of the company or client. You would obviously have to slot that in. But as far as the valuation aspect is concerned, the platform will produce the rest of the data. I always save the best to last. Many of you already will have a template that you're using at the moment, you're comfortable with, it's been approved. So you actually have an option of uploading your template to the system. And then what you can do is craft and create your own valuation report. So what we've done here, this is like a la carte. You've got a system of data points from the platform, and then you sit down, decide what you want to slot in to your report. So if you liked our qualitative assessment, you would copy and paste that placeholder on page 6, and that would instruct the platform where to insert the data. So a bit of patience required. Clearly, this wouldn't be a 10-minute job. You probably have to spend an hour or two just going through methodologically, just going through selecting which data points are most applicable. But once you've done that, you would name it, save it, and next time you come here, you've got your own methodologies. So that is pretty much it, I think, for the demo. Just a final point from my end, if anybody's interested in a conversation, if you'd like to learn more, if you'd like to see the tool in action again, discuss commercials, please do take a screenshot of my details there. So yeah, look forward to hearing from you.
Fantastic. Thank you so much, Greg. If you're comfortable now, we'll take some questions from the audience. We have Andrew asking, how far back in time can a valuation be undertaken using the software?
We typically limit that to 10 years because not all data sets go back, the same, years.
Perfect. And also asking, what methodology do you use for growth shares?
Different ones. I mean, like Greg just showed us, we provide, a whole range of methodologies. Growth shares, I typically recommend, the venture capital method, right? Is a really interesting one for that. Obviously, DCF is also one that works really well, right? Because it prices in growth in the future. But it also depends on the industry, right?
Perfect. Yeah. I'm not sure if you want to go into the details of what subscription prices are for different size firms, but one question I thought it might be worth asking is, what are the bare minimum amount of valuations that a firm should be doing to really benefit from using this platform?
Sure, perhaps I can take that one. Really good question. That's the number one question we always get asked. We're often at Accountex and other exhibition centres, and people kind of like to look at the software, and they're always kind of wondering that classic commercial viability question. So we have two packages. The entry level package is kind of a light pack, and we focus on firms that are doing a minimum of 5 or 6 valuations per year. Okay, so I know a lot of your members on the call will be doing about that. However, we also got a pro pack, and the whole idea of the pro pack, as the name suggests, you can do unlimited amounts of valuation. So as long as you're doing 5 or 6, we can definitely become commercially viable.
So then, I'm also not sure if you're comfortable talking about this, but what's the average cost, do you think, of a valuation report across the country? Can a member charge more money potentially as a result of getting that more detailed report?
Yeah, so that's a question I typically pose when I do client meetings. And I've done a fair few of those, and the typical kind of average valuation report across the country, I would say would be anywhere from £3,000 to £5,000. Yeah, so I say the median would be 3.5. To answer the second part of your question, yeah, absolutely. What we've seen personally, if people invest in the software, naturally the output is more detailed, maybe a bit more aesthetically better looking, perhaps more kind of thorough, detailed. So definitely our clients have also said that they're able to charge a little bit more money. And usually the additional amount that they charge, that covers the cost of the software.
Perfect. Ben asking a really interesting question here. What reporting and support is there within the platform and or the wider service offering to support valuation review challenges, say from the HMRC on a tax valuation or an auditor expert, for example, PPA or impairment? What has been your experience in practice with HMRC and audit reviews?
Maybe I can cover the part about PPA and impairments, and
sure.
and maybe our colleagues from Wilson Partner want to talk about the HMRC valuations, or Greg. So impairment testing is something that people do a lot in Valutico. We never built it for that, but it works very well. PPA is different. We do provide you some inputs also for your PPAs. A lot of our clients have asked if we can build a specific PPA, a purchase price allocation module, but so far we haven't had the resources yet, but it's definitely on our roadmap. Yeah, and HMRC tax valuations. I'm not an expert. I don't know, Greg, if you can answer that.
I'll take that one. Yeah, but lots of kind of questions in one there. So in terms of contentious valuations that go to court, we've got about 18 forensic accountants on our books making use of the platform. So most importantly, the whole idea of the content, it stacks up in court. So yeah, no issues with any of our clients there. And we can perform a very, very simplistic tax valuation for HMRC purposes. Yeah.
Perfect.
Yeah, we tend to, if we're responding to HMRC, the questions tend to be more around the assumptions that you've used and things like that, which we tend to derive outside the platform. So rates of discounts and things like that. So we probably don't necessarily have to refer back to Valutico to respond. We would respond independently.
Greg, you spoke about lack of resource being part of the decision there. What are the next generation features that you do have coming up for Valutico?
Yeah, really good question. So the nice aspects about our firm and our kind of culture is that we really build the product around our clients. So we always take active feedback. We always kind of do surveys, have kind of sessions to find out what they would like to see on the platform. And the two things really that most people are of interest is more data. Of course, people can't get enough data. So we're continually adding new database providers to the platform. So watch this space. I would imagine in 2026, there'll be some activity there. And also, I'll probably hand back to Paul because we've got some new exciting features on the AI front. And I think that we're already focused on peer selection and transaction selection kind of moving forward. But I'm not going to steal Paul's thunder. I'll hand back to you, Paul.
Yeah, definitely some improvements there. That's something where people just expect perfect suggestions now, and but there is no such thing as a perfect peer group, right? But we're getting very close to that. And then a whole range of other AI features, more improvements around document ingestion, right? You just you start a valuation by just uploading a bunch of documents, everything you have, and we extract all the other information we need from that. And then also tighter integration with our due diligence and virtual data room solution. What we are building is basically an integrated platform, again, where you just provide information in a virtual data room, but also in the public domain. So we'll also have more advanced data scrapers, and we basically fill more and more of the information in a typical valuation for you. So more automation.
Brilliant, thank you. Can I turn to Philip and Tyron and just ask as my last question to you, what would your advice be for anybody looking at going into this area, looking at maybe incorporating Valutico into their company, just really curious about stretching out in the service line? Is there any key takeaway having listened today that you would share with them?
Yeah, I think Tyron was touching on it in terms of it has given us some efficiency. I think I've heard numbers between 30 to 70% of efficiency gains from deploying the platform. I think you still need a level of expertise because garbage in, garbage out. So you still need to be comfortable about determining appropriate levels of discounts and premiums and so forth. So I think expertise is critical. It's not a panacea to it. It gives us a very good view on an indicative valuation, but then we will supplement that with our own thoughts. There's always that Aristotle dilemma around, is it an art? Is it a science? This is probably the science part. The art part comes from expertise in doing valuations.
Fantastic. Tyron, anything to add from your side?
I think for us, it definitely adds efficiency to the process. What we've seen is the AI gives us the peer selection and comparable transactions, but a big chunk of time spent in valuation, as Philip, more than that is just understanding and making sure, as Greg also said, the business plan, as I call it, the Valutico, the forecast, is based on the peer group. So the majority of the time, especially with the sort of junior staff members, is spent on making sure, reading every single company, making sure it's relevant. So a big chunk of the work behind the scenes goes into the peer selection, because what we've seen is the market approach, which is typical, the multiples, is the big chunk of the approach that most people and that we use most often. Just on, if you think about DCF, which is the typical one, everybody studies at university, everybody can do that, but it's not, I would say, it's not always relevant. If management don't provide a forecast or don't ever do a forecast, you can't do a forecast. So it's like, we can comment on that, but it normally defaults to the market approach, which is the peer group and comparable transactions, which takes a lot of time to make sure you've got the right group.
Brilliant. Thank you. That's all the time we have today. So I just want to thank you, Paul, Greg, Philip, Tyron, for your time, your insights today. Thank you, our viewers and listening, for joining us and for putting your questions to us. Andrew, please do reach out directly to Greg to discuss that pricing for you and your firm. There will be a short feedback survey that's going to pop up on your screen as soon as this webinar ends. Please take a minute just to fill that out. Let us know if you learned everything you were hoping to learn from the webinar today with Valutico, if there's anything else you'd like to hear about from Valutico, and also from the ICAEW, how we can support you and your practice going forward. Other than that, the webinar has been recorded. You'll receive the slides, the useful links, and the recording in a follow-up email after this. Other than that, thank you so much again for joining us, and we'll see you next time.
Thank you, Roz. Thank you, Philip and Tyrone.
Thank you.
Thank you.